Good morning, everybody. Welcome to the Flow Show. Here we are, finally into September. Soon be Christmas, everybody. So get your shopping list ready. Morning, Kay. How you doing, mate?
Morning, Ryan. Good morning, everybody. Yeah, I'm doing fine. Was an interesting weekend. I admire the people who are doing the weather forecast because they were spot on. We did not see any snow, but we virtually had all the rest.
Yeah, wasn't the pretty shocking morning this morning over here. Plenty of rain. But yeah, it was the air show down here this weekend, so at least it didn't rain for that, which is very thankful for. Right, so a big week awaits, a big month awaits. So let's start it off, shall we, with what's been going on so far. Over in China, PBOC has been fixing lower in the yuan. We're fixing down in the 710s, more reflecting where we're trading at the moment. So we've been slowly coming down from up near 714. They're now down at 710s. So still a lot of this I think is to do with what's going on in the dollar more than China. There's no real reason for the Chinese yuan to be strengthening. But we are mooching around this area here. We've had a little break below. Looks like we might be trying to hold below this break, which suggests that further downside may be coming for that. But China in no rush to put any brakes on it either side at the moment. We've had a lot of the PMIs coming out, finals and whatnot, manufacturing PMIs coming out. China was out with theirs as well. As you can see there, we've got manufacturing PMI coming in at 49.1 on Saturday. So worse than expected. Was expected to improve a bit worse than last month. Services did improve though to 50.3. This is the main Chinese number. We have had the Caixin manufacturing data as well, which came in better at 50.4 versus 50 expected. So that's an improvement there. Was in contraction at 49.8. Over in Japan, a little bit soft on some capital spending data there, 7.4. Still a good number, but missing expectations. 9.6 expected, but it was higher than last month as well. Their manufacturing PMI improving a touch as well to 49.8, but still in contraction, and that's been a bit of a theme that we've seen so far today. Australia doing the same thing as well, a little bit of an improvement, beating expectations, higher than last month, still in contraction. Coming across to there's that other China number, I knew it was in there somewhere. Coming across to Europe, Spain going backwards a little bit, was expected to rise to 51.4, came in at 50.5. Italy showing a bit of an improvement as well, beating expectations and last month. France doing the same thing. Even Germany's managed to put in a bit of a better final number, and a lot of these are final numbers for manufacturing, but as you can see, still in contraction territory. The pan-Eurozone number reflecting all that as well, going up 2 pips over the flash number and prior. UK staying unchanged, still the best of the bunch, 52.5 for the final number there. There's still some of that UK exceptionalism showing through from that data as well. Just looking back at some of last week's data as well. We had obviously the PCE data coming out, which was one of the big watches. It came in largely around expectations, a bit lower than expectations, I should say, but unchanged over last month. So no real change at all on that one. Not that it had a huge effect on markets. The market knows that the Fed is angling for its first cut, so it would have taken some big data to change that around. Anything going on in the third decimals for that one, Kay?
I think it's 0.16 or so, the monthly, which is just above that line where it would have printed only a 0.1 or so. No, what I took out of those is that there doesn't seem too many problems with the consumer thing, like the income spending, and it doesn't show more flags than what we had so far. So yeah, I guess a lot in the market are hoping or expecting for those numbers to gradually come lower, but it does seem that the consumer holds relatively stable, shall I say.
Yeah, very much so. And what was more soft landing news, if you like, was the income and spending data, which held up as well, and that was slightly better or as expected. So that shows that the consumer isn't disappearing into a fiery hole just yet. So that was some good news as well. We had Canadian data out, some GDP data Q2, annualized quarter-on-quarter data coming in better at 2.1%, although the June monthly coming in flatter. So everything looking okay-ish over there in Canada. Now, both those sets of data had the market rejigging central bank expectations. Still pricing a 25 pip cut for the Fed in September and 100 pips of rate cuts by year end, which still may sound a little bit toppy. 100 basis points of cuts, that would be a cut pretty much every meeting for the rest of the year. I'm still not sure they're going to go that fast, but you never know. As for the BOC, they are expected to cut. We got them this week, of course. They're expected to cut 25 pips at the meeting, and swaps pricing sees about 30 basis points of cuts for September, which was little changed than it was before that GDP data. We got the University of Michigan final numbers out as well. Pretty much no real change, just slight improvement in current conditions, but still down on last month. The overall number just improving a pip, up on last month as well. As for expectations, came in unchanged over the flash, but up on last month. The only thing to note was really the 1 year CPI number coming down to 2.8%. These are still running slightly hot for the series. The 5 year inflation number staying unchanged. Again, this is the final number, but if it continues to trend down, that'd be good news for the Fed and their cut plans as well, if they know that inflation expectations from the consumer is under control. So all good there for the Fed. There was a piece out from the EIA talking about the Labor Day holiday, which is, of course, today both the US and Canada on closures. They said gasoline prices were 13% lower than this time last year, and that decrease in prices at the pumps has been driven by weak growth in global and US petroleum product demand, continued crude oil production growth from countries outside of OPEC Plus, and China's slowing economy. So it's pretty much highlighting the situation for oil markets and as we've seen in manufacturing and whatnot. And on the OPEC Plus front, sources pieces are already coming out ahead of the next meeting in October, saying they're likely to proceed with gradual oil production increases from October. That was always part of the plan, which of course isn't going to help oil prices either. We're seeing some downward pressure still on that. We're still playing the game between geopolitics and conflicts and whatever going on, and the demand side. So that's adding to the weakness there. Getting a little bounce this morning, that just on the back of some of those improved PMIs, but that's looking dead cattish anyway. So yeah, we've got ISM manufacturing tomorrow, which will be a big number for oil traders as well. If that's a real stinker, we could be heading down to some of these low areas down in the sub 70 region. So keep an eye on that data. That's what I've got on the headline front. We've still got some stuff going on in the UK around the budget and finance and everything. That's going to continue into October. So we'll bring you that as it comes up. Kate, anything you've got on the radar?
Well, there were those local votes in Germany over the weekend. The extremist parties, left or right, have managed to gather much more votes compared to the traditional parties. AFD has become the biggest party in Thuringia, and in Saxony they just trailed the CDU. So the well the thing is, nobody really wants to rule with AFD. So there's only a very small chance that they form a government. It's a bit like we used to have in France, or still exists in France with Le Pen. But yeah, it's also getting tough for the traditional parties to find majorities. So there's a bit of shenanigans going on there, and again in Germany, which is already sputtering. And so yeah, that's the one that well, stuck out. That's another risk in the European political landscape, I'd say. It didn't really affect the markets at all, because we can see that this morning Euro is actually doing pretty much better than anything else. But perhaps those PMIs have played a role. But yeah, I'd say it's something that we need to keep an eye on for further developments.
Yeah, very much so, mate. Probably, I don't know when the next election is over there, but it'll become a feature when there's a next big election over there. I'm just trying to think when the next election might be. I'll have to look it up. Anyway, it's not this week, so don't have to worry about it. Let's have a look at what's coming up this week, though. I said US and Canada on their holidays today, so it's probably going to be a bit of a quiet one, which is always nice to start the week off with. Tomorrow, as said, we get the manufacturing PMIs from the US, so that big ISM. That was one that the employment data got the market running around a bit after the last month's NFP, so that's going to be a close watch, no doubt. Wednesday, we start getting all the final services PMI data coming through, which is probably the bigger ones for a lot of countries anyway. As mentioned, Bank of Canada, an announcement on Wednesday. Do you think there's any risk of not meeting the market expectations for the BOC in another cut?
McClem has been dovish enough, yeah, and his famous line that they are still okay with the divergence between them and the US should in theory be a no-brainer for another cut. But that's maybe he will signal a pause then. That is perhaps what may drive the Canadian dollar on the back of the announcement. And I'd say that is, I haven't read anything else, but that would be kind of the scenario that I can see, is that they do go to 4.25 and then pause. They're all data dependent. We've been saying that for months, but so any real weak data could still see them cut. But perhaps McClem will say, like, all right, I mean, this is how far the divergence between us and the Fed is going to go right now.
Yeah, I agree with that, and I think that's going to be the case. The market's always going to be far more dovish on how many cuts all these central banks are going to do. So that's going to be the risk going forward now, is whether they cut to the market's expectations, or, as Kay mentioned, do another cut and then have a little pause, see what's going on. They don't want to cut too fast, or they risk stoking the very same inflation that they've been trying to fight against. So it's going to be a slowly process, I think, going on there. But we'll talk about the BOC later in the week anyway. Jolts on Friday as well, which it's a bit lagging, and it's not the best indicator, but it's one that a lot of people look at, particularly being jobs week. So that will get some attention, no doubt. Thursday, we get ADP, which is obviously usually on a Wednesday, but as it's holiday this week, they've punted it to the Thursday, which means we get that. Challenger layoffs, jobless claims, all in on the same day. So that's going to get the market a bit lively for expectations for Friday's non-farm payroll. And Seems funny to say it, Kay, but Friday's payrolls number is probably one of the biggest for a long while, given where the market is after the last one, and jobs and Fed cuts and everything else.
Yeah.
So it's going to be a spicy one, whatever the number is, I think.
Yeah, absolutely, and then the market will immediately turn its attention to the household number as well. That I'm not even sure if it's a fixed time that comes out. It's never on any calendars, but they will look at the difference that there might be, and the actual dollar move may more happen on the household number than on the NFP, or any NFP move. BLS induced move could be reversed once this household comes out. So I mean, to me, Fridays could be quite messy, simply quite messy.
To say the least, yeah.
Yeah, I mean, because now people will think that all the BLS numbers are going to be overstated, and well, rightfully so if we look at the first revision. But then we already had rumors about, and you said it last Thursday already, I think, Goldman Sachs saying that the revision shouldn't have been for minus 800 or whatever, but only minus 300 due to the migrant workers not being taken up in some of the numbers. So yeah, I think it could be a real mess come Friday, and yeah,
let's not forget the storm. Let's not forget the storm. A lot of banks talking about the impact of the storm might add, 200, 250 jobs back into it. So yeah,
as well. You know what? I'd rather look at the unemployment number than taking the NFP number for its value.
Yeah, no, I think you're right on that, and I'll just take that with the participation rate as well. So anyway, either way, it's going to be a spicy one. So it's going to be fun, and I'll have the non-farm payrolls competition up at some point before then, obviously, and we'll see what prizes we can dig up for that one. So don't forget to look out for the competition. And it's also double bubble because we have the Canada jobs report as well, which will be a first test for whatever message we get from the Bank of Canada on Wednesday. So that's how to judge that data. If they're really dovish on Wednesday and we get a really strong jobs number, you're going to see the market going the other way. So that's going to be a bit of a spicy one as well if you trade in the Ludi. Right, so that's everything there on the calendar. So let's have a look at what's going on in markets at the moment. A bit of a lull, shall we say? Yeah, we're seeing the dollar a little bit weaker this morning. I don't think it's anything significant. We're just mooching around. We've tried euro dollar. We tried the support down at 110.40s. This was a level that we hit on the way up, and it's proving to be support on the way back down again. Getting a little bounce up towards the 110 area again. 110.80 is this zone here. See if we get above there. I don't know if we're going to break back above that. I still remain short. I've got my stops just above 111.20s at the moment now, just seeing if I can run this as far as it can go. Probably need to stick a fib in there, actually, but I don't like too short-term fibs, personally. Kay, the euro, just going to be doing this tread water between the data points, I think.
I think so. Yep. I think so. I'm also still a bit on the short side, but I won't fight any move back through 111 figure 10 or so, and I'll let it go. I mean, very small risk on that one. Yeah, this is my feeling too. Just range between now and whatever data could come out. Yeah, of course, tomorrow we could have those services data, and then of course we have like a big jobs week in the US. US is likely going to be the bigger driver for the euro dollar pair this week, right? And then we'll see. I mean, it holds that little level there, just below 110.5. That's interesting because that could mean that this is just technically a retracement, shall we say? So that little level is interesting there, just below the 110.5.
Yeah.
And topside 111 for now, and that's what we're probably going to trade inside that range. Yeah.
Yeah, exactly. I think this week is going to be about, you've got to have your eye on the central banks for everything that goes on this week. Okay, be it the Fed, ECB, or whatever. So we're going to potentially swing around with all these data points. So this is maybe not a week to think to pick a side, be choosy. We know that with all likelihood the Fed's going to cut in September. And there's not really going to be any data that derails that unless we get really stupidly hot data, jobs, wages, or whatever. That's not going to be derailed. So all we're going to be trading now is just the minutiae of the expectations going in. Is if it's a really bad NFP, the market will ramp up 50 pip cuts and that sort of thing. If the data's hotter, it will reduce 50 basis point cuts, but probably keep firm on the 25 pip cuts, but then reduce further cuts to come. So we're not, you can't really take a side and say, oh, right, the Fed's cutting, so I'm going to sell the dollar, whatever happens. Because you could get, a weak number and we see the dollar weakening again and euro dollar shooting up, or vice versa, you get strong numbers. So for me, it's going to be about just rolling with the punches. If I'm going to trade big moves, it's going to be on the data, and I'm going to pick my big levels. We know 111 is a level, but we're pretty close. We know 112 is a big level. We know 110 is a big level. So there's enough either side of the range to say, right, if it's a big data point and we hit these levels, that's perhaps where we should try trading rather than messing around in the middle here, because you could get one good data point 1 minute and then a bad data point the next minute, and you're up and down and up and down. So I think, as I say, rolling with the punches, or which way the markets go, seems to be the way forward. Euro sterling, that's done it. It's come down. It's hit the level. It's held the level. We're back above the level at the moment, above the 20s. So we said this was going to be the sticky area, and thus it's proved to be again. So now we need to see what we're going to do. Are we going to have a move up 84.50s, 84.70s, 80s? Are we going to sit in this range, or is something going to come along that gives us a kick up there or a kick down below? Again, I'm still short. My last cut was 84.04, so 4 pips off the current low. Happy with that. I've got my stop down a bit now, 84.60, just protecting the rest. So just above this sort of area here. We've had this prior resistance down, 84.30s, 40s. I'm just got my stop in there now, 84.60 on the rest just to protect it. But otherwise, I'm going to see what happens. You still short this one, Kay?
Yep. Same level. I think 84.50, 60 is where any retracement should cap, barring a change in data. I think it's just clear. And in the meantime, we need to respect that zone. I trust quite a few people are either taking profit on when they're short, like we already did for pieces as well, and for the rest waiting for what the data are going to bring. And I can see some people trying to play the other side because it has bounced quite strongly off that 83.90 figure. So a bit of two-way action here, and you always have to take that into account. Markets can trade data, but currencies don't always move constantly on the data. You have other flows as well. There's some importers may have stuff to do as well, and I mean we just look at it with our levels, and that's it.
Yeah, no, I agree with that. But I think if we continue to sit down here and hold it as support, I think I might think about turning long, just to try the level, and then maybe put some sell stops below these lows to catch a potential break if it does go.
I think we are going to have a month in 2 parts. I don't know when is the UK CPI. Any idea?
It must be around. I think it's around the 17th, 18th, something like that. I'll have to look it up.
Quickly, perhaps have a look, but it's going to be a month in 2 halves. The first part of the month, obviously, we will have US jobs data driving sterling around, but driving the cable around, and that may have an impact, obviously, on the euro sterling as well. But I think we're really going into a month of two halves. First half, I would say, don't change winning team. Sterling will or could retain some form of its strength, and then the second half is going to be decisive. We will have that inflation, then we will be going into the central banks, Fed, ECB, and then the Bank of England. And then we are going to run into the front-running period or the upcoming period of the budget. And I think in the second half of September, that may be when the sterling really picks up a bigger move. Which way? I really don't know right now, but assuming that the Bank of England holds and that inflation comes in as expected or still slightly sticky, then I think it's really the budget which may change the picture for sterling. But I do think that second part of September into October, that's where we are going to see fresh moves in the sterling develop.
Yeah, CPI is on Fed Day, actually the 18th.
Oh, there we go.
Day before the BOE.
There we go.
So
yeah.
There we go. So anyway, yeah, euro sterling. I said I may look to flip long, but there's lots coming out. My early thoughts on the budget is I'm expecting it to be negative for the quid. That's just my feeling that they're gonna really go to penny pinch and hit taxes and raise taxes and whatever. And but there's always two sides of it. There's fiscal discipline side, and then there's the economic boosting side of a budget. But I think the discipline side may. It's hard to say with these budgets. If you've got a disciplined country, that's usually positive for the currency. But if it's at the behest of growth, then that can become a negative. Anyway, my early thoughts are I don't see it as a positive thing for the quid. But we should wait.
Neither do I. To me, there's a risk in it, and in the whole combination of that may be the first honeymoon period over with this government, and as we know, sterling can trade a bit emotionally, and I think there's a bit of a risk for the sterling building second part of the month, and then especially on the budget, of course.
Yeah. And Ali, I see your short euro sterling down here. Depends on your viewpoint, mate. We're at the bottom of a range. So, you're trading short, not far off the bottom of the range. That's fine. We're not bouncing above 30s really. So, you know where your risk is. So that looks pretty good. But that if we do hold this zone down here, then we're probably going to get a bit of a significant bounce. So, again, I don't think your risk reward is too great in terms of which way it's going. But you're your own man, mate. You're short, and I hope you make the pips. But you need that move. Definitely need that move under the big figure to kick you off. Right, I got put out my Kiwi long on my trailing stop. We ran into trouble up into the 63s. Let's just bring it in a little bit. We did get this break above the 62s, got the run up to 63s. We managed to get above the prior highs we saw earlier this year, but not the big figure. Pretty much nailed that on the nose. Now we've got this pullback. Now this is where the important test begins. Are we going to hold this break that we made, which might give it the springboard to then push high and take out this high, or are we going to fail and come back into the range? So this one, I'm not looking to trade it to this week, I don't think, but I'll watch this level carefully. If we do stay above it through all the data and whatnot, I might look to get back into longs, but this is going to be an important test if we get down there. We have this big, strong move up, and this is one of the levels that's going to put that to the test. I'm still short a bit of dollar CAD. That's banging its head around about the big figure at the moment in this zone. So there's really been no bounce so far in all this move from 139. So this is probably the best bounce it's had so far, and that's probably a bit of squaring off, I think, which is something you're going to have to look for again amongst trading. People who are coming into big data, particularly for this one in the BOC. Anyone who's short might want to think about taking some their position, their risk off the table into the BOC. You can always put it back on after. So I wouldn't be surprised if we see maybe a bit more of a stronger pullback and a push higher into the 135s, depending on what happens, of course, with the data and the BOC. What will be interesting in what happens after the BOC, if they cut and then we see dollar CAD dropping, i.e. the CAD strengthening, then we could be on for another leg down, because that'll be the market saying, yeah, the BSE cut, we've expected it. Now we're back to seeing what the US wants to do. Alternatively, we get a BSE cut, we get strong US data, we could be all the way back up trading 136s. So again, this is another pair that's got binary risk, and I think you've just got to move with whatever direction it takes you and what the data and stuff says. You got any thoughts on that, mate?
Scenario one to me, Ryan. Market front running a cut, and then perhaps McClem coming out saying like this is the last one, and they need to go the other side. That's kind of my thought. Obviously oil and things, but that's more like an OPEC problem right now. I think the Bank of Canada and the jobs report, especially if we get like a good jobs report out of Canada, for instance, after a Bank of Canada cut and McClem going neutral, that may really underpin the Canadian dollar. Now, is it going to be against the US? That's going to be depending on the US jobs reports, obviously, but I can see some of those crosses also. If you yeah, we've come off towards the end of the month as well. I think there was a lot of month end in there, but get a bit of a lift in those Canadian crosses. I mean, Canadian dollar weaker into the Bank of Canada. We may be at interesting levels to perhaps try something, especially if they come out with a we are done for now, and data turns, or let's say we get a bit of a better print on Friday. That could be all of a sudden putting a serious bid under the Canadian dollar. That is the risk scenario that I see, because a lot of people are so negative on the Canadian dollar as well. Now, if McClem comes out, of course, Dovish and the jobs report is not good, then the Canadian dollar will probably get a severe slap. But I think the risk is more like front running, sell Canadian dollar, and then being forced to buy it back. There's nothing worse than the market that is forced to buy back something that they sold pretty heavily into data or decisions. Also, the market's always going to react harder on a surprise or a counter market decision also.
Yeah, I agree with that. Right, mate, I'll bang it over to you if you've got a couple to show us.
Yeah.
So,
and I'm going to show that Euro Swiss. It's a bit strange, Ali, because right here, okay, there's perhaps that really small level at 04 or so, but I don't see too much in the Euro Swiss otherwise here. I don't know what you're leaning against to be short, but we did see, and this is a bit of a double level, like the way up and on the way down. Also, we did see Euro Swiss hold pretty well, and I know and I'm not a big fan of Euro either, but we did see better numbers out of Switzerland. The last batch of numbers were pretty good versus expectations, and yet we found those supports. I don't know, but we had Jordan out on Friday as well. It does seem that they may be tempted to, I'm not going to say heavily intervene, but trying to smooth this kind of move, not to let the market undo the good work that they had done before. And this again has been a pretty second part of the month. There's something going on every second part of the month in Switzerland, yeah. the market is seemingly forced to buy Swiss. Now, I'm not going to judge your Euro Swiss position. It could come back down to this level, but just know that we held a pretty decent level, and there is nothing really. And I have a double level at 94.40. So your stop is before that, right? 94.29. I don't see anything at 94.30 personally. So or 25 or so. I don't see anything. Just perhaps those little tops here, but that's around 94.20. But no, to me, 94.40 is rather the level. But yeah, and again, I'm not going to judge your position because I don't really know. I did pick up just a little bit of sterling Swiss on Friday, a bit late to the party already. I would have preferred to pick it up a bit lower down. But I still think that the first part of September, barring adverse data, should be a bit positive in sterling. And I was looking anyway for levels in to be just a little short in Swiss franc to start the month. We could have again a month in two halves, and that is sort of what I'm trying here. But it's really a position I'm not going to fight with too much whiskey in the books. I know Derej, if you're here, you always like to see what's happening in gold. Well, gold is just a game of ping pong right now, and I hope you can play. You're a good ping pong player because then you're going to make a bit of money on gold. It's trading 24, 90, 93, 25, 30, right? And so we had this earlier move down here. Where we went slightly below the support zone. It created a new trend line, but really to change the market here out of this zone, which by the way, I still think it's holding high levels, so that it's still supportive in the more medium term to go higher for now. But if we start to break below 24.70, 75, the party may be over for a while, and then we can see deeper corrections. In the meantime, ping pong, and we really are going to have to break 30.35 to get up to those 25.5 zone, and perhaps why not in a further future up even into the 26s. But that'll be decided, I reckon. Also, possibly this is going to range until the second part of September as well. Who knows? Unless those jobs data in the US send it far away from where we are. Another one that I had a little dabble in is dollar stocky, and I don't know if Marcus will probably watch the show in delay, or whether you're here, Marcus. There's several possibilities here. Either we held around the prior lows that we saw in March, and here in even start of the year, although we started from much lower. But as we can see, it's been a bit of a support zone here in around the 10.15s, and that was the low, and we start to move higher. So therefore, we need to break this trend line around 10.27, 7.5, and we need to get back above 10.30, hold to move up to 10.40s. Or this is a flag, and if we get back below 10.22, 21.5, we're going to revisit the lows, and who knows what's going to happen, perhaps depending on those US jobs data as well. But anyway, I thought that this was an interesting zone enough to have a little nibble at it, and it's really a little one. Counter trade here, trying to see if we can start to build some form of a base around the trend line, and then start to move higher again. So this for the dollar stocky. But if you look at it in the more medium term, that's why I'm saying I'm staying really small. Is that it is still looking pretty negative for as long as we hold under 10.30. But it is stocky. It's a bit of an accelerated euro. So if the euro goes higher, this could actually start to drop below again. But let's see. not a huge euro fan right now. Ryan already showed. Yeah, I mean, we have to talk about the yen. Yeah, we have to talk about it because everybody is trying to find all those kind of levels. There was a lot to do about month end that did not materialize. Actually, we had the move on the one day before on the day before last. This could have been the month end move in Japan. But now we are moving higher again, and around this 146.5 is an interesting zone, and we are above it right now. I know that we've done it before, and then we turned around. But to me, this could actually get back up to 147.60. I think the market is just looking a bit too much for moves in the yen right here and now. Yeah, JGB's ticked up a little, but then the rest of the yields have been ticking up smalls too. We're still, though, comfortably, as we can see here, under the 1% mark, despite UEDA still remaining on the potential, well, not potential, but likely hike path. Obviously, September is going to be very interesting as well, because we will have the Fed meeting. We will have the a Bank of Japan meeting. No.
Hello?
Do you guys hear me?
You just cut out there for a bit.
Am I back? You can hear me?
Yeah, can hear you now, mate.
Okay. Seems that my microphone, and I don't know, maybe I touched my keyboard also. Yeah, so it's going to be very interesting in September. The big level for me is going to be up here around in those 149s. If that would towards the end of September break, then I think we are going to be in trading in the 150s, likely back up to 152. Okay. In the meantime, we are starting to build some supports. The first one is around 145.5, and the second one really somewhere in the 144. So those are supports to watch for now. And I think for a US holiday, Canadian holiday, that's enough for today. Ryan, I'm passing it back over to you, mate.
Yep, thank you very much, mate. I think that'll do for today, getting us set up for the week. It's going to be a busy one, so use today to get planning. Have a good week, everybody. Trade safe, trade well. Thank you, Kate, as always, and we'll catch you all tomorrow. Have a good one, everybody.